right? So first of all, let's talk about the revenue cycle. Okay. The revenue cycle is a recurring set of business activity and related information processing operations associated with providing goods and services to customers and collecting cash in payment for those sales. Now we see these contrast diagrams of the revenue cycle, okay, in which we're going to see, right, revenue cycle is dealing with various entities, right, including customers, right. Also, revenue cycle is also dealing with other cycles like expenditure cycles, production cycles, right, HR cycle, and general ledgers, reporting systems, and also banks. And we see data flows from resources to destinations through this process, the revenue cycle process. Okay, so if we expand these contrast diagrams to a little bit more details, we can see basically 4 revenue cycles. So in the level 0 data flow diagram, we're going to see the four processes. We have sales order entry, shipping, billing, and then cash collections. So before we cover these 4 processes, let's talk about the general threats. General threats to the revenue cycle activities and the related controls. So these general threats controls applies to all the processes in this cycle. So the first threat is inaccurate master data. So the customer master data, inventory master data, and pricing master data may be inaccurate. Right, for example, errors in customer data could result in shipping or goods to the wrong address, right? Or the errors in inventory data can result in failure to timely fulfill customer orders due to unanticipated shortages. For example, right? Your database shows that you have inventory available, but in fact, it is not available. And errors in pricing master data can result in, right, customer will be overbilled, or in most cases will be underbilled. A price error, right, which is often happens online store, right? Price error. I think Amazon have price error in Amazon's usually every shopping season, and sometimes the price is ridiculously low. And anyway, Amazon used to honor all their price errors, but most stores don't. So these are the threats. So what are the controls? So we can use data processing integrity controls to minimize the risk of data input errors. Okay, so we talk about input controls in the previous lecture, and you can check what are those input controls. And also we can use access restrictions, right, to restrict access to the data and the configuration of the system. So only the authorized employees can make changes to master data. And we also have a detective control. That is, we're going to review of changes made to the master data. Right? We're going to generate some reports about all the changes, and it will be routinely reviewed so that unauthorized change will be detected or any errors will be detected. So the second general threat is unauthorized disclosure of sensitive information, right? Such as pricing policies or most likely customer information, personal information. So one way to control or to mitigate this risk is to to have access control, so that only the authorized employees can view the information. And also we need to encrypt information in storage and information in transit. Okay, so we talked about encryption in the previous lecture. But encryption can only keep information that in storage and in transit to be safe, but not information in process. Okay, so to make the information in process, under process, safe, we need to adopt these tokenization. So tokenization is going to make information safe because, for example, when I send my credit card number online through online to the company, okay, my credit card number will be tokenized. In other words, it will be converted to a random other numbers, okay, to the company through a third party. And even the employee in that company see my numbers, okay, it's useless because that's tokenized. Okay, it's not my true number. So that's tokenization. You can click this link to view more details about tokenization. Okay, a third general threat is a loss or destruction of data. So related controls include backup, right, data backup, and disaster recovery plan. So in accounting information systems, accountants should use their knowledge about the underlying business processes to design innovative reports that provide management with insight beyond those provided by traditional financial statements. Okay, so this control is used to deal with the poor performance threat, which is a fourth general threat. Right, we have some multiple choices. So let's talk about the first process in revenue cycle: sales order entry. And we have the level 1 DFD for the sales order entry, and it has four processes, including taking customer orders, approving credit, right, checking inventory availability, and then we have an additional one which is responding to customer inquiries. So from this DFD, we can see clearly, right? Customer is going to send order data to this taking order process, and the data also will be retrieved from the customer database. Okay, and it will be sent to the next process, which is approving credit. Okay, so the customer credit will be checked. Again, this need information or data back and forth between the customer database. Okay, and if it's rejected, we're going to send data back to customer. And if it's approved, we move to the next process, which is checking inventory availability. Okay, and this involves data exchanged between the inventory database. So if data is not, if inventory is not available, okay, we're going to send that data to purchasing department, and that is a back orders. And if information is available, okay, and the sale, we're going to complete the sale process, which is we're going to send, right, picking ticket to the warehouse and sales orders to the shipping and billing, and also update the sales order database, right? It's a complete sales order, and also acknowledge customers. Okay. During the whole process, we may have to answer customers' questions. That is handled by this process, responding customer inquiries. Again, it involves getting data from customer and sales order, right, database. Maybe, for example, customer is going to check with a sales status, order status. We need to get the data from the sales order database. Okay. So this is the general picture of the sales order entry process. So the first step is taking orders, and in this process we're gonna generate the sales order document, right? Now it's usually electronic form. So let's talk about some of the IT development for this process. Electronic data interchange, or EDI. So customers may use EDI to submit order electronically in a format compatible with the company's sales order processing system. Okay, so this improves the efficiency for both parties. So in other words, the customer's sales order can be easily read by the company's system through EDI. Okay, so EDI can be viewed as a computerized communications and a standard coding schema for submitting business documents electronically. Right, you can watch these videos to learn more about EDI. Second, we have these QR codes. QR codes are two-dimensional barcodes that can be scanned with smartphone, which is now very popular. So it provides customers with access to multimedia anywhere at any time. Just a scan with a smartphone, you can get all the information you need. Right? You can also watch these videos to learn more about QR codes. And also, companies often use sales history to create marketing messages. For example, when you purchase something in Amazon, and you will give some suggestion, other purchase suggestions, right? Or you can receive advertisement emails, or you will have an online advertisement targeted at you specifically. So all these are the use of your purchase history to create your personalized marketing messages. All right, so let's talk about the threats and controls in this process. Right, the first threat is incomplete or inaccurate order. Right, for example, customer forgot to select the size of the clothes or color of the product, something like that. Right. So what are the controls we can use? Okay. So we will have the data entry controls, which can automatically help us to check the completeness of the order information. Okay. If customer forget to choose something, right, it's gonna get the system is gonna give customer some warnings. Okay, please select size or color. We have some automatic lookup from our database. For example, the shipping address, right? When the customer input shipping address in the online form, the system is going to check the database. If the customer information is available, right, it's going to get automatically let the customer to fill their form, right, with information from our database. And also, it's going to have the reasonableness test, right? It will be unreasonable to order a huge amount of like ice cream, maybe 10,000 ice creams, right? It's not reasonable. The system is going to give a warning. And the second threat is legitimacy of orders or invalid orders. Right? Sales order must be authorized from their customer, right? And sometimes it's not from the customer, but somebody else who's using customer's information. So the system is going to detect that. Controls we can use to mitigate these threats is through signatures, right? For example, written signatures, and for online transactions we have digital signature. Okay, we have talked about digital signature from the previous lectures. And the second process is credit approval. Right, once we received order, and if we provide purchase credit purchase or credit sales, right, we're gonna check customer's credit. So most business-to-business sales are made on credit, and credit sales should be approved before they are processed. Now, each customer will have a credit limit. So the credit limit is the maximum allowable balance for each customer to use. Right? And this is based on the customer's past credit history and ability to pay. So for existing customers, credit approval simply involves checking the customer's most file to verify the customer's credit limit, right? Their credit balances and age of any outstanding unpaid invoices. So this process can be done automatically by the system. So the threat and controls, right? For the credit approval, the threat is uncollectible accounts. So what are the controls can mitigate these risks? Right? We have the credit limit. Right? We have talked about the credit limit already. And also we need special authorization to approve new credit or to increase existing credit. Okay, usually this can be done by the credit manager. Okay, credit manager. This cannot be done by the sales manager or salesperson. And the customer's account receivable should be monitored closely. For example, we have this accounts receivable agent report. It lists all the customer account balances by length of time outstanding. So it's very clear to see, right, the unpaid amount and whether they're past due or not. So managers should regularly review these accounts receivable agent report, right? To get any warnings, signs about customers who fall behind in their payment schedules. All right, next step is checking inventory availability. So if sufficient inventory is available, right, so we can complete the sales. Then the sales order is completed and the shipping, inventory controls and billing department will be notified of the sale. And also acknowledgement will be sent to the customers. Okay. Very likely an email saying your order has been confirmed. But if there's not sufficient inventories on hand, then a back order is created. Sometimes we're going to send information to customers to see whether they agree to have a back order or not, right? Something like that. All right, so once items become available, we're going to have these generate a picking ticket, a document called picking ticket. Okay, so the picking ticket authorizes inventory control functions to release merchandises to the shipping department, usually authorize the warehouse to release the inventory to the shipping department. Okay. So what are the threats and controls in this process? Right? One threat is stockouts or excess inventory. Too many or too little inventory. Both are threats. Right? To mitigate the risk, we can have perpetual inventory systems. Right? Accounting, we talk about that. Right? Because the perpetual inventory system is going to give us a real-time inventory numbers. This can avoid, right, any unexpected stockouts or excessive inventories problems. But in order to use perpetual inventory systems, we need to carefully be very careful about data entry. Right, for example, shipping and sales, right? Person must correctly record the quantity of items removed from inventory and delivered to customers. Okay, so this is important to keep data accuracy in the perpetual inventory system. Second controls, we can use barcodes or RFID. So both can help us get an accurate inventory in and out quantities. RFID is known as the right. It's a radio frequency identification tag. So this can eliminate many of the problems mentioned above, because now the data entry occurs automatically. Okay, the system is going to receive the radio frequency sent from those inventories, individual inventories, and can track their movement if they're in or out. All these can be captured by the system. Right? Can I watch these videos to learn more details about RFID. And also we have these interesting articles about Walmart's inventory problems to see what's Walmart's inventory problems and what is the possible solutions. Right? Other controls we have, like trainings, right? A physical count is always a good control. And also sales forecast also can help us mitigate inventory problem. Responding or acknowledging. So it's part of the customer service, which is important. So the objective of responding to customer inquiries is to retain customers. If customers are unsatisfied, and they will leave. Okay. And many companies use special software packages known as customer relationship management, CRM systems. Okay. So the goal of CRM is to, again, retain customers. So in plain language, in simple words, right? Basically, it's a software or database containing all information about customers, the histories, the preferences, so that it can better provide more personalized services to customers. Right. So we have a very right. I think the Salesforce is one of the major companies who is providing CRM software. Salesforce. I can watch these videos just to learn more detail about CRM systems. And other tools we can use to better facilitate include chat bots, right? A lot of times when you get to the company's web pages, right, there will be a chat bot. So it's a robot, basically, can answer some of your questions. Most of the general questions can be answered through chat bots. Right. And also we have social media tools. Right? Companies may have Facebook pages or other pages. They have blog to promote their services or product. And the one I use a lot is real-time assistance. Right? Can be your online chat or a traditional phone calls. Okay. All right. So the second basic activity in revenue cycle is shipping, which is filling customers' orders and shipping the goods. We have basically two processes. The shipping activity. We have the picking and packing order process, and then the shipping order process. Right, from the last activities, we're gonna get the picking ticket. Okay. So employee is going to take inventory out with the picking ticket, take inventory out from the warehouse and send it to the carrier or shipping department. So the shipping department compares the physical count of inventory with the quantities indicated on the picking ticket, with the quantity indicated on the copy of the sales order that was sent directly to the shipping from sales order entry. Remember, in the last step, right here, the sales order information is sent to the shipping department. Okay, but warehouse only received the picking ticket. So the warehouse is going to pick the inventory listed in the picking ticket and send to the shipping department. And now the shipping department has a chance to verify what has been picked by the warehouse. So basically compare what has been picked by the warehouse and with information from the sales order, right? It's a very nice controls. Okay, so once the number is confirmed, item and number are confirmed, the shipping department is going to update the inventory master file, indicating, right, inventory has been reduced, sold. And meanwhile, it's going to generate a packing slip. Okay, packing slip. And the bill of lading. A packing slip lists the quantity and the description of each item. Usually this is included in the packages or sent to the carrier. And the bill of lading is a legal contract that defines responsibility for the goods in transit. Right? Of course, the company is going to pick which carrier they're going to send. Okay. So traditionally, many companies have maintained their relationship with some of the carriers, like UPS, right, or USPS or DHL. Right here we have a DFD, level 1 DFD for the shipping process. Right? I think we have talked about these data flow, right? Picking ticket, right? Then goods and picking ticket will be sent to the shipping department, which is it's very important. As you can see, shipping department is going to have the goods, right? Packing slip and bill of lading sent to carrier. And meanwhile, it's going to update the sales order database, inventory database, shipment database, right? And also it's going to send the bill of lading and packing slip to the billing department, Right, so here we have two videos. One is introduce Amazon's warehouse, the latest technologies and their controls. And the other is how Amazon fulfill their one-day shipping. So how do they handle all these problems in from their one-day shipping arrangement? Threats and controls. Right, threats, picking wrong items or quantities to ship. Right, controls. RFID and barcodes technology for sure it's going to help. And also we're going to reconcile picking list to sales order is also important. We talk about that. Theft, employee theft. How to prevent employee theft? We have restrict physical access to inventories. Right, valuable inventories will be locked. Okay, we always restrict access. We need to document inventory transfers. Okay, from one place to the other place or from one department to the other department, all should be documented. Again, RFID and barcode is going to help. Okay. And also we need to restrict ability to cancel sales. Especially need to restrict the employee from the shipping department to cancel sales, because they can order, right, something for their friends, right, and they can authorize a shipment immediately, and then they're gonna cancel their sales. So by doing that, they can avoid payment. So that will be restricted. Okay, and be very careful about those one-time customers to prevent employees from using those kind of technique to conceal theft of inventory. Again, physical count is going, and reconciliation is going to help. Shipping errors. So controls dealing with shipping errors include, we have reconciliation of shipping documents to sales orders, right? Picking lists and packing slips. And also we're going to have data entry, edit controls, and configure ERP systems to prevent duplicate shipment. So once the sale order, the item in the sale order is shipped, okay, and the system should prevent a duplicate shipment for the same item in the same sales order. Okay, the system should detect that and prevent that from happening. Okay, we have some multiple choice for you to practice. Next activity is billing activity. Billing process. We have two processes. We have invoicing and then updating accounts receivables. Right, the document from the first process is sales invoice, and documents involved in this process we have credit memos and monthly statements. Right, invoice is a document that notifies customers to make payment, right? And credit memo, right, is a document that authorizes the crediting of the customer's accounts. So these are the documents from these processes. And regarding accounts receivables, basically we have two ways to handle accounts receivables or customer payment. One is open invoice method. Right? Basically, this customer need to pay by invoice. For each invoice, customer is going to make payment. It's open invoice method. Another is the balance forward method. Okay, so we're going to pull all the purchase, all the invoice, and send a statement, monthly statement to customers, so that they can pay. They can pay the make payment monthly. That is a balance forward method. So one advantage of the open invoice method is that you can include, right, discount for prompt payment. But the disadvantage is that open invoice, right, is going to give you more complexity, right? So more work, basically, if you have a lot of customers, a lot of invoices. The open invoice method is typically used by business whose customers are also other business. So B2B is used by B2B because the number of individual transactions is usually quite large. So for them, this balance forward method is more efficient. And also it reduces cost. Right, but be careful with the balance forward method. You cannot send the monthly statement by the end of the month to all your customers. It's going to give you some cash flow problems, right? Because all customers, they will pay within a specific period in the month. For example, a week after you receive the statement. In other weeks, you don't have any cash inflows and you will have problems. So basically, we can do a cycle billing. So for different customers, their statement cycle will be different, so that we can evenly spread out the cash flows from your customers. Right, here we have a DFD for the billing process. So to generate invoices, we need to have, right, sales order. We need to have the packing slip and bill of lading, so we know the order, the sale has been completed. So we're going to send out invoice to customers. Also update the customers and the sales database, right? And also send data to the general ledger to update accounting journal entries. Right, and for accounts receivables, basically it's going to exchange data between the customer database, right, and also update with the general ledgers, accounting information system, accounting journal entries, and also deal with the customers. All right. And the document used to update the accounts receivable is a remittance list. When customers make payment, they're going to send the remittance list. And this is from the mailroom. And we're going to use these to update the accounts receivables. Alright, threats and controls. Threats, failing to bill customers. So segregating the shipping and billing functions can reduce this risk. Otherwise, an employee can authorize the shipping without sending a bill to his or her friends. That's going to be a problem. And we also have billing errors. So we have controls to deal with billing errors, that is data entry and controls. We talk about that, right? Or the configure systems for automatically enter the price data. So the price data will be obtained directly from the pricing MOST files. Okay, it cannot be changed or modified unless it's authorized, right? And also the pricing data has to have the restriction of access. Or reconciliation can also help to mitigate the billing errors. Right, about receivables, we have posting errors in accounts receivable threats. Data entry, edit controls, again, is good control. And also the batch totals can also be a good control. And mailing monthly statement to customers is also good control. And if we have these traditional accounting, the reconciliation of subsidiary accounts receivable to the amount for accounts receivable in the general ledger can be a good control. But in information systems, right, these two are automatically linked. Right? So if we have the numbers in the subsidiary of accounts receivables, it will be added up automatically to get the numbers in the accounts receivable in the general ledger. So it does not apply to the modern accounting information system. Another threat is inaccurate or invalid credit memos. Right? You know, credit memos is, for example, the customers are not satisfied with the product, and you can offer credit memos that reduces customers' account payables or reduces your accounts receivables from that customer, which is very important because it can be easily abused. So therefore, a person who can issue credit memos, okay, cannot have the right to enter sales order or maintain customer account. Right? And also a person who handles cash, okay, cannot issue credit memos. Those are very good controls. And also the system should be designed so that it can block certain credit memos. Okay, especially those suspicious ones will be temporarily blocked. and will be authorized, reviewed, and authorized later. Right, the final activity is cash collections in the revenue cycle. Cash collections. So this is a process that is going to have customer payment and also update their account balances. So once customer pays, how does the company identify what the payment is for? Okay, so there are many tools that's going to solve this problem. For example, we can send two copies of invoices to the customer, so when they make payment, they can send one invoices back. Alternatively, or probably more popular way, is use the remittance. Okay. So basically, the mailroom person is going to prepare remittance list. Okay. Once they receive the payment, right? If the customer sends mails to make the payment, the mailroom person is going to prepare a remittance list. It provides the names and amounts of all customers and what those payment for. Okay? And will be sent to the accounts receivable. Right, but the mailroom may not be efficient, right? To speed up the process, company can set up lockbox. Lockbox is a postal address to which customers send their remittances. So basically, the company is going to work with participating banks. Okay. So all the checks sent to the lockbox will be sent to the bank and will be processed or be deposited over there. The bank then will send the remittance advices, which is usually an electronic list of all remittances, and also including the photocopies of those checks to the company. Right? This makes speed up all the process. And now we have we're moving towards electronic lockbox. It's no longer a physical lockbox. We have electronic lockbox in which the banks is going to electronically send all the information to the company. Right? Lockbox arrangements, however, can save the amount of time during the processing time, okay, but not necessarily the mailing time, right? Because if customers send mails to the lockbox, it still takes a few days. To speed up again, we can use electronic funds transfer, ETF. Right? Basically, the customer is going to send their remittances electronically to the company's bank, thus eliminates the delay associated with the time, right, to mail the payment. Usually, this is the ETF usually accomplished through the bank's systems automated clearinghouse ACH network. The problem with ETF is it only contains the payment information, not necessarily the remittance data. Okay. Usually the company need to send remittance data through their EDI system. So it's going to do that through two channels, the payment and the EDI, or it can be combined together in one system, which is known as the Financial Electronic Data Interchange, FEDI. FEDI solves this problem by integrating both the payment and the remittance data into one stream. So the when company pays, it sends the payment together with the remittance data to the bank. Okay? And through the bank networks, my bank is going to send me the remittance data and all the receipt information. Okay? This is known as FEDI. FEDI solves this problem. Another thing that is usually we need to consider is to choose a payment process and providers. If we use a lot of those credit card sales or credit card sales, okay, we need to choose a payment processing provider. Okay, can be your traditional ones, or it can be your all those rising star like PayPal or Square. So you can watch these videos to learn what's the difference between those new providers with the traditional providers. What's the advantage or what's the disadvantage? Okay, so let's talk about the threats and controls in this process. Threats, theft of cash. So to prevent or to mitigate this risk, it's very important we have a proper segregation of handling cash, right? And posting to customer accounts, authorized credit memos, and reconcile bank account. So the person who's handling cash cannot do anything about customer account, cannot authorize credit memos, cannot reconcile bank account. These are the three important segregations that can prevent cash theft. And also use EFT, use FEDI, use lockbox, can mitigate cash theft. There's another thing about this is called a Universal Payment Identification Code. Okay, is updated EFT because it can hide a lot of our bank information. So it can only provide a number, okay, a number to the customer so they can remit payment. That's it, through the ACH networks. That's it, without releasing detailed information about our bank account information. That is the UPIC. And also to mitigate the theft of cash risk, we must have the prompt, restricted endorsement of all customer checks. Okay. Use of cash registers and deposit or cash receipt data. And also, if we still use the traditional mails to collect the payment, we should have 2 people in the mailroom to open all mails. Okay? Create list of customer payment immediately upon opening mails. Another threat is cash flow problems, okay? Which means in some certain periods we don't have any cash inflows, but in other periods we have too many cash inflows. Okay, those are problems. So the controls we use is we're going to choose the best payment method. Okay, we're going to offer a discount for early payment, and most importantly, to have the cash flow budgeting. Right, we have some multiple choice questions. And here we have a question, practice questions, separation of duties. Okay. So for all these activities, which of the following can be performed by the same individuals? Okay, by the same individuals, which means there's no conflict. Okay. Answer will be posted page 23. We have another case studies about internal controls. So you can study this case to see what are the weakness and problems with all their processes, and recommended recommendations to correct those weaknesses.